Zoom is the #1 video conferencing solution in the marketplace here in the United States, and it has become very popular. I definitely use it for work. I use it for business meetings, but heck, I've attended funerals on Zoom. I've attended certain family gatherings. I have a church group that I attend on Zoom. Zoom is reaching all kinds of places and taking meetings that were at one time in person into an online environment. So it's pretty interesting. The company has grown tremendously. COVID really helped the company grow because, frankly, we all had to get on video conferencing to do our jobs or get educated and so forth. And the company's really sustained that success. They had their earnings today. They had positive earnings, and I have new information to update my valuation of Zoom, and I'd like to share that with you. My name is Victor. I have an MBA, a lot of business experience, and I love analyzing companies. I like sharing that analysis on YouTube. Do me a big favor and like my video and subscribe to my channel. You can see more videos like this one. Now, let me share my process and my analysis of Zoom. I've created a process for myself over many years of evaluating a company and determining if I want to be an investor in that company. It involves 4 questions followed by a decision to buy, hold, or sell. The first question I want to ask is, do I want to be a part owner in that business? I really like the industry. Second, is the management team doing a really good job? Is the company operating and performing well? Third, is debt under control and less than 3 times EBITDA? And then fourth, is there a discount on the stock? I work hard for my money, and when I invested in a stock, I want to see that there's a path where my money is going to grow. It's going to appreciate. And getting a discount on the front end, being a value investor, makes me feel like I'm going to get appreciation in my stock versus buying a stock that is overpriced. Based on the answers to those questions, I decide whether I'm going to buy, hold, or sell a particular stock. Understanding the Zoom story, it's easy to get your head around it, probably because you've used Zoom, if not today, this week. I know I've used it a couple of times today, and Zoom is pretty much, I use Zoom more than the telephone now, which is pretty incredible. So I understand what their service is to people. I understand it's valuable. Boy, it replaces expensive travel. It replaces in-person meetings, which make it far more convenient. You can also share documents in a meeting. So I totally get the company. I think they're very well run. They provide the best experience to the end user, and that experience is what led for it to be the most popular choice among users. And that's why Zoom took off. And even though they have competition from Microsoft, Google, Cisco, many competitors, Zoom rose to the top because they had the best user interface, the best user experience. And that's not letting up. They're doing really well. They continue to grow. They had their earnings today. So the story on the company, it's easy to get my head around it. Industry-wise, I really like software companies. As Zoom is proving, once you have the platform, you have the users, your profitability is really good as a software company. Your free cash flow generation, real good. So I like the industry and I like the company. What's working for Zoom is just to try to be the best within one category. And they're trying to be the best video conferencing company around. They're trying to expand past that. And if they continue to be the best video conferencing platform and then add some additional services, I think they're going to do well. Some people would recommend that this company diversify, and maybe. But companies like, for example, Google, they had a very simple business. It was search at the very beginning. They just did it really, really, really well, better than anybody, clearly better than anybody. And they just became a very big business. And they began to diversify, but not too far away from their original business. Zoom is nowhere near the size of Google. And I think there's still a lot of growth to be had within video conferencing and communications. But I really like that they have focused on a very narrow band of services, and they are trying to perfect those services and clearly be the dominant player within that category. Their earnings were announced today, and they showed that they've been growing. They've been growing their revenue. They grew for the quarter. If you compare the second quarter of 2023 to the second quarter of 2022, they grew by 3.6% top line revenue on a consistent currency perspective. Overall, they grew 4.5%. If you look at enterprise revenue, which is business customers, that's growing even faster. So their consumer business maybe is letting up a little bit, but their business customer, that part of the business is growing. Margins look great. 40% margins, wonderful. Operating cash flow up 30%. That is great to see. And that supports my observation that software companies, they're just more profitable than other industries, and they generate a lot of free cash. The number of customers, enterprise customers, meaning big businesses that use Zoom and are customers that are spending more than $100,000 on Zoom, that's up almost 18%. So I think just a really healthy, positive earnings was released today for Zoom. Their income statement looked really good. I'm going to start with the quarter. In 2022, for the quarter, they were roughly 1.1 billion. And the same quarter for 2023, their revenue went up by about $40 million. So really nice growth there. For the first 6 months, their revenue has gone from 2.17 billion up to 2.24 billion. So nice growth rate. What I really like seeing is look at their net income, 181 million, close to 182 million. It's up from 46 million. So just a big jump, a big leap forward in the current quarter. For the first 6 months, really nice increase from 159 million in profit up to 197 million in profit. Earnings per share is just really jumped forward. So it's really good to see that the company is really profitable and operating very well. Their balance sheet's really healthy. They don't have any debt, and their stockpile of cash and marketable securities just keeps going up. So this quarter, they showed that they added well over $400 million of cash and marketable securities to the balance sheet. They already had a high balance before, so the balance sheet's in really good health at Zoom. So the statement of cash flows for the current quarter, it really went up nicely. It went up from 257 million up to $336 million. Nice big jump in the quarter. Really helped the company catch up to where they were last year. If you look at the first 6 months, it actually has gone down a little bit from 783 in 2022 for the first half to 754 in the first half of 23. Now, looking at CapEx, they spent $46 million in CapEx, which again, it's a software company. They don't have to spend a lot of CapEx, which is good to see. So it leaves a lot of free cash flow. And that's not too bad. For the first half, they're spending a little more CapEx, probably trying to build into some of those businesses they're trying to grow. So it's good to see they have lots of free cash on the balance sheet. I believe that Zoom is selling at a discount of 62%. That's a pretty healthy discount. How did I get there? I'm valuing Zoom using two methods, using the free cash flow method and then using an earnings per share discounted method. Let's go over free cash flow method first. I'm going to take the cash flows that I expect Zoom is going to produce really over the next 4 years and then indefinitely. This bucket is really the terminal value. That's all cash flows beyond year 4. I'm going to start with a run rate using 2022. Cash flows are growing. So I'm going to grow them by about 10% for the first year, ending up at $1.3 billion of free cash flow. Years 2 through 4, I'm going to grow at 5%. And then to get to that terminal value, I'm growing at 3%. I think those are conservative numbers. Zoom can definitely grow faster than that, but I'm going to go conservative on this valuation. So I'm going to have free cash flows in the first 4 years of this amount, and then terminal value is this amount of 31 billion. I'm going to discount those free cash flows by 8% as a weighted average cost of capital. They have a healthy balance sheet, lots of cash on the balance sheet. And based on that discount rate, I get a value of all those free cash flows of nearly $31 billion. I add the cash on the balance sheet and I take out the debt, which in this case is zero. And I get to an enterprise value of $37 billion. So I believe that the company is worth $37 billion. The market cap that the market is selling stocks at, all the stocks available in the marketplace, if you add them up, they're worth 20 billion. So there's a pretty big gap between the value that I'm calculating and the market cap. Therefore, I think there's a 79% discount on Zoom available. If you look at the cash flows that the company is going to produce, I believe that each share is worth $124 per share based on the cash flow they're going to produce. But the stock market will sell you as many shares as you want to buy at $69 a share. The earnings per share looks really good. Earnings per share is expected to be $4.30 for this year per share. I'm going to use a PE of 24. Software companies can be upwards of 34, 36. And I'm going to use 24 since they are a smaller company. They have moderate growth. And I'm going to have a growth rate of 3%. Again, a conservative factor. Then based on those numbers and this calculation here, I get to a stock value using the earnings per share method of $89.74. Stock market will sell you as many shares as you want to buy for $69.65. So there's a 29% discount available if we use the earnings per share method. I combine the two. I pour more weight into the free cash flow method. I take 2/3 free cash flow method, 1/3 earnings per share method. And based on that ratio, I get a blended value of 62% for Zoom. So let me revisit my scorecard for Zoom. First, do I want to be part owner in this company? Do I like the industry? Yes. And I think the management team's doing a really good job of operating Zoom, focusing on the primary business. They don't have any debt, so they're well below 3x EBITDA, and they offer a really healthy discount. So I'm going to continue to buy shares in Zoom. Looking at where Zoom is traded over the last 8 months, the company has had a really nice rise in 2023 and then a significant drop. It's gone up and down, but boy, the market hasn't really been sure where to price Zoom stock. My valuation is way up here, $112 per share. And right now you can buy all the shares you want at $66 a share, although the stock is up like 3% in after hours trading. But the stock's down here and there's significant value in the company. The question is Zoom going to continue to grow? What's going to happen to Zoom? I think they're a pretty good acquisition target. I think a company like a Google, Alphabet, or some company that really wants to have video conferencing as part of their portfolio of software solutions could definitely acquire Zoom. Maybe an Apple, which, heck, I think Apple would do really well by acquiring Zoom. Haven't heard anything like that. That's just my thinking that they are an acquisition target. Since there's so much value here, there's very good revenue, very good profit, very good cash flow generation. So that's what leads me to think that way. And they definitely are a company that I want to buy stock in and watch them grow over time. Year to date, they are not keeping up with the market. They're up almost 1% year to date. And if you look at other tech stocks, especially the ones that were caught in the AI craze, they're well into 30, 40, 50% gains, if not more. The Zoom video continues to be really successful, and it's good to see that they're doing well. If they can continue to grow, I think they can just continue to be a really nice standalone company. They have a strong value proposition to an investor. I'm going to continue to buy shares and just keep owning more of this company. Really appreciate you watching the video. Do me a favor and like my video and consider subscribing to my channel. With that, good luck investing in 2023.